It's taken over 100 days since the all-time high to get within 12% of that price target. Now we've hit $96,000 for the first time in over 2 months. The last time that happened was just before this mega collapse down to $77,000. Now I think the perfect storm continues to brew here, leading into the top of the bull market. Generally, there is not much time left. There is less time now from here until the end of the peak than what we've currently experienced from the lows being November 2022. We have to remember that moving forward, because what is going to happen next is the noise is going to get louder, and for some reason or another, there's going to be an explanation of how the bull market is just beginning. No, make no mistake, the bull market began in November of 2022. So this now goes back over 800 days, coming up to 900 days. And generally we've seen bull markets run roughly 1100 days. So there is a lot less time to go in this bull market than I think many believe, because of some of the narratives coming up. Now, on top of this, the perfect storm with the economy, the stock markets as they continue to climb higher, the US dollar as it breaks down on a macro scale here, and of course interest rates, which are all making headlines in the coming weeks, if not already, as I said, brewing for this perfect storm. Heaps to get through in today's video with you. Hit the like button, subscribe to the channel. We got the breakout, and you guys might get that 30-minute video again. Let's see. Okay, Bitcoin, some of the major signals from this point. Short term, yes, there is a breakout above 96,000, slightly weaker close here. Volume is slightly higher than the previous days of this week, but overall it's a relatively low volume week. Now the breakout week happened to be around Easter, which there is low volume overall. Generally, it's one of the weakest or the lowest volume weeks overall. So it's a good thing to see. At least it's got higher volume. Basically, it's market participation, slightly higher than the week before that, but overall relatively low when you look at the rest of the history here. But there are some pretty positive signs across the board with the market, the price action here, getting above the previous tops of the 2021 highs. And we've now seen, well, a weekly close on it. And this action is attempting to close above it and trying to hit the 99,000 resistance level. Of course, it's going to come into alignment with the 100,000 as well. But the main thing I want to look at here are these 3 bars up. You probably remember me talking heaps about the 3 bars down from the December high, which basically called this decline, into the $75,000 low, basically slowing the market down. It didn't mean the cycle was over, but we're seeing that now on from the low point here with 3 weekly bars up and 4 at the moment, 4 green bars to the upside. This one here has a lower high, lower low, but it did close in the green. We're concerned here with the 3 green weeks up, because what we've seen from previous lows, and as a signal for BTC, it is a pretty good signal, pretty strong signal. Doesn't mean it's going to go straight up and, this is the run to the top, but it's a good sign that we're seeing the trends change. Taking a look at the previous higher swing lows from August and September, we didn't get one straight out of the August low. We had a higher low form and then 3 up bars, higher highs and higher lows. Take note that the energy did start to run out. That's why there was a correction, but the correction was a higher low, which is a good sign. And then it broke above the top, the swing high here on increased volume. So there's the increased volume compared to this move to the upside. So that's just subtle signs of strength. At this time, looking back, it looks pretty simple, but at the time, most were still calling for another major correction, because that's what they had gotten used to over the period of 200 plus days. And like we've been looking at with the fear and greed index, also through that period, you had 5 months of the market sentiment dying out, and then it took another couple of months for the sentiment to build back up. The market is within that phase at the moment. Take a quick look back at the daily chart. We've got the 4 to 5 months of declining market sentiment leading into this low, the higher low, and now it's starting to climb out of there. And I suspect it's going to take 1 or 2 months, hit some sort of resistance levels, and then fade back again, at which point, hopefully, we start to see the market sentiment reset again. The worst thing we want to see in a bull market is this thing shoot straight up. I know a lot of people would love that, but that means you'd have an even quicker run to the top as opposed to consolidation before the market moves up. So in terms of the signals that we've obviously been tracking now for years on the channel that have worked out very, very well, like we've seen from lows and from highs, these in particular, these 3 bars, whether it's up or 3 bars down from significant turning points, have essentially done an excellent job at calling for changes in trend. Now, the change in trend can take time. That's either from a low base forming or from a high price point with a distribution, and then you get the breakdown from there. So it happened from the top. It looks like we're getting one of those now from this low at $74,000. So taking a look back at history, we had 3 bars up from a higher low. I generally like to see it from the significant low, but in this case, I'm just using the signal to have a look at how the market responds after these 3 up bars, and in this case on the weekly chart. So we've got 3 here, small correction of 2, and then continues on, another 3 there. So it's not important that we get 3, 5, 1. It doesn't matter from that point. It matters from around the low area to let us know that the trend is changing. Trend changes will have pullbacks in them as well, and we definitely want to see a pullback. So the previous 3 bars up from that point was through this consolidation. Then we had nice 3 bars, broke the highs, started to consolidate again, pushed and continued to push higher. You also had another one here, 3 bars up, and that ran into the peak. Pretty strong move up into that peak. And that's what I mean about if we see these 3 bars run up now and then just continue to power on, it basically runs into a peak too quickly, and then you get this huge consolidation that takes place. I mean, it's possible that we do see another one of those. It just would not be great to see another fast move from here, because then that would lead to a longer consolidation and probably continue to form weakness into that peak. So that would be a pretty weak move. Going back throughout the history on the chart here, looking at another 3 days from a very significant point. That's the cycle low there, November, and then the higher low, very, very, very solid point as well, and a very important point. You had 1, 2, 3, and of course, market had to correct and then powered on from that point again. There is your bear market, and there were no 3 green bars in that entire bear market. In this final move up into the top, we had the lows form, the base form here, and then 3 green bars after that July higher low. That continued on, ran into the peak. Then we had another one coming out of the lows here of the cycle low of 2018. So here is the higher low forming, and then green inside, green inside, green, green, green. So none of these went below the previous week. And then this nice big powerful move away from there as well. And then in 2017, some pretty consistent 3 green weeks out of significant lows. You can see it time and time again and continue to run the price chart up, correct, and then keep going from there. Now, while there's strength in Bitcoin, we haven't seen the same strength follow through with USDT dominance. This is your stable coin market. It continues to hold up at the 50% level. So I'm on a little bit of a red alert here that maybe we're coming towards the end of this short-term move. When I talk about short-term for BTC, I'm looking at the days to the weeks, medium-term weeks, multi-weeks, months, and long-term months, multi-months into years as well. So in the short term, it looks like we need to see whether this money is going to continue to follow through, or if we're getting just a final burst to the upside to extend those ranges, which is a good sign before there is a correction from there as well. USDT hasn't broken down from the 5%, but if it did, then of course we'd start to see even more go back into BTC. This has been a really, really good chart to keep following throughout this bull market. And the theory that I hold with this chart is any sort of move down towards 3.7%, but not breaking 3.7%, is a weaker overall Bitcoin and cryptocurrency bull market, because we saw the same thing happen in 2021. There was the big breakdown for BTC, and of course USDT ran up. And then over that period, you saw some money flow out of USDT, but not enough to break down the lows that formed at that first peak in April. And then of course, everyone got scared out, bear market began, and all that money flowed right back into USDT, running the dominance up to about 9.5%. So we're going to be on the watch out now for the end of this cycle, wherever this top comes in. If we get the breakdown here, that is going to be monstrous for Bitcoin and of course some of the stronger altcoins as well. The breakdown through 3.7%. So the story continues. The perfect storm, in my opinion, of course, would be a breakdown of 3.7%, and then we could see things go absolutely bonkers. Of course, the stock market and the real estate market have to continue to follow through, otherwise we wouldn't see these prices go up for BTC. We are seeing a slowdown on gold at the moment, and I'll show you that on the chart in just a second, what that means over this next sort of 12 or so months, 6 to 12 months. But if you remember back 2022, 2023, the media were all saying the markets cannot go higher if interest rates are increased. We saw interest rates increased and we saw everything else go higher. And that, to me, is part of the winner's curse phase leading into the peak of the 18-year cycle. It happens every single time we start to see interest rates increase. We see a flood of money coming in from governments and from banks to compensate for this increase in the interest rates. And then that money has to flow out into the markets. And of course, stock markets, real estate get a huge influx of that capital, and then Bitcoin and cryptocurrencies as well. And some of you are obviously following the global money supply with a leading or lagging indicator, whichever one suits you at the time. But with that in mind, the strong assets need to be chosen in order for that money to find its way into the right assets that are going to keep working. And I'll show you that with Bitcoin against gold in just a moment, and how I'm using that towards the end of the cycle as well. For the S&P 500, we've just seen a small pullback here on the daily. Ran up to nearly 5,700 points, being one of the, this is the largest move we've seen in this entire correction. Therefore, we've got an overbalance in price, an overbalance in time. It seems like the trends are most definitely changing, and it would be a much lower probability to take out these lows at 48 and 4,900 points for the S&P. Corrections are going to come. We've shown this with the cycles leading into the second quarter and third quarter of 2025. I don't know if this is going to be an easy straight up ride from here, but nonetheless, looks like the low is forming or has formed already, and it's basically a bit of a choppy ride moving forward. Good signs are there overall. As I've said, perfect storm is brewing. Any corrections from this point down to, I'm looking at 51 to 5,200 points, which were the previous support levels, previous higher swing low, are still okay for the consolidation at this low before we start to see higher prices. In previous severe declines, like we saw in the COVID dump, the market did take time just to consolidate at this higher level after such a significant dump, and then start to move again. So there are always going to be times where it slows down, and in this case, we're watching a time frame of roughly about a month. You can see 40 days or 27 trading days before the trend got going again into that next peak. For the fundamentalists among us, they'll be wondering, why is this the case when we're just looking at charts? How can this be the case, of course? Well, we've got plenty of high impact news announcements coming out for the US. You've got your federal funds rate coming out next week, so the interest rates. The forecast is still at 4.5%, currently at 4.5%. Even for the UK, they've got the bank rates coming out, and they're looking to cut their interest rates at the next meeting. So basically the same, a few hours later, the next day for the UK, and Australia is coming up the week after that. But of course, the main one here is for the US, and they're looking to stay around the same interest rate, probably off the back of the yields spiking and the bonds dropping. So they're in between a rock and a hard place. The rest of the market, the inflation started to come down. The economy seems okay at this point amongst all of the tariff news. And so I guess the general populace is expecting interest rate cuts, or they believe there should be an interest rate cut, as does Trump. But from breaking things with flip-flopping on tariffs, it seems like they're in a rock and a hard place, and they need to continue to hold here because there has been confidence lost in the bond market, and therefore the interest rates are going to have to remain at least steady to have some sort of reason for people to want to buy these bonds. Speaking of the confidence lost, we don't have that at the moment for the CNN Business Fear and Greed on the S&P 500, neutral. That's the reading here, neutral, finally getting out of the fear and this huge climb out since these lows of 4, 5, and I think it was a reading of 3 on the 8th of April. So nearly a month later, and finally hitting the neutral mark here for the S&P 500 as it reclaims the 50% level. This looks to be another perfect storm brewing. And I brought that up because of what we saw in 2022, 2023, when I discussed this on X and on the YouTube videos all those years ago. The things seemed to be brewing relatively well, yet the general media, for whatever reason, were looking for major recession, huge declines, popular names. Everyone was looking for a major decline in 2023. It did not seem like that would be the case at that time. And of course, now we've seen prices continue to rise from there. There is probably some sort of pause going on here for the US dollar and maybe a little bit of a bounce. This seems pretty typical of the US dollar going back 11 years now. Once it breaks down and hits a new fresh low of roughly 3 years, you can see I've got a date range of 38 months, 33 months, 37 months. At around this 3-year point, it generally pauses. So it's done a considerable move. It's broken 3-year lows, and then it goes on a bit of a pause for a few months. It happened 2018. It happened again in 2020 to 2021. And at the moment, it looks like it's happening again in 2025. This is a new 3-year low. We've gone on a significant decline. We've got 3 months down. You want to chuck your Gann Swing Pros on with your bar types. Turn on the bar type. You can see that we've got now 3 red arrows on top of these bars, which would suggest that we're going to eventually see further downside. But again, this is a macro chart. And after such a severe move with increased volume on this bar, slightly higher close, this could be an area that we find support for the time being on this chart, and before we start to see further decline. And I think that's also showing up for a gold here, with gold having a peak, breaking down, lower swing top, just sitting on the 50% level here, and these declines are now overbalancing to the downside. So we've got a $300 move from the high, and the previous moves on gold coming all the way back from the low in 2023. This one here, $260. So that's from this top to the low. This one here, $260. This one here, $230. And the speed of the decline has increased dramatically, taking 1.5 days, if you want, 2 days, to get to $240, to basically do the same decline that it took, in this case, 3 days, in this case, a couple of weeks, in this case, about 5 months to do. So it happened in just 2 days. So you're seeing a lot of volatility at for gold around, which is a potential peak. Can't say that it is for sure, but it seems like a potential peak at the moment. And again, if we saw some breakdowns underneath $3,200, this would probably lead to a bit of a grind out here for gold. And this would be similar, I would say, if the dollar started to grind out here sideways and consolidate again before its next move, gold would probably do something similar. We've seen this before as part of the what I'm calling a perfect storm, because you're seeing a slowdown on these risk-off assets, gold, and then the money flow back into the markets. And 2006 is an area that I was watching as gold was running up from 3K to 3.5K, where there were these huge moves up, big corrections. And that decline was about 25%, top to bottom. This took 16 months until it was ready to break out again. At the end of 2007, the stock market topped in October. So just as the stock market was topping, gold was breaking out, and that's where it had its next significant move, and the S&P 500 topped right here. So let's keep a watch out for that over the next sort of 12 or so months. As I said, this is part of that peak that I'm watching now because of the signs we're seeing here. Much higher volatility, declines are increasing at a rapid speed, and you can see the decline increase here in terms of price. $300 down compared to anything in the last 2 and a bit years is the greatest decline that we've seen now. And that is good for the risk on assets. Now, the final piece of the puzzle is the Home Builders ETF. If you guys are watching, we're on our monthly chart. We have 1, 2, 3 red months from the all-time high price. Is this the final top? That's anyone's guess. But you're asking my opinion with the probabilities from what we've seen with this very fantastic signal. If we don't get a new top, then we're probably going somewhere underneath a lower swing high. However, if we do get a new top, is where I was going with that, it could take a couple of years. Check out these price ranges here. So let's throw on a few of my date ranges that I had prepared. We've seen this signal here at a new, fresh, all-time high back in 2018. 1, 2, 3 months down. Don't worry about the green. People get a little confused with that. That's okay. Red, red, red. Lower highs, lower lows. That took 24 months to reach a new all-time high. COVID happened, and then it bounced back from that. The The recent one we saw in 2021, 22, 1, 2, 3 months down, 24 months, new all-time high. And if this happens to be the cycle peak, you guys that have made it this far in the video, I told you I was going to do a long video here. Hit the like button, subscribe to the channel. This is the big one. If this is the end, it could take, well, we've only got one data point here, but it could take 139 months to reach a new all-time high. This is the Home Builders ETF. So if this is the final top for the Home Builders ETF, doesn't mean that the US house prices have topped, because we showed in yesterday's video they're continuing up, but this is like one of those early warning signs. Then this could be the peak. We will eventually see the top of the house prices this year or next year, and then we'll see the stock market top, and then things get pretty bad. But this is a bullish video because we're talking about the run into the bull market top, the perfect storm into this bull market top, the money continuing to flow out into the stock market, and we've seen with BTC. But what is 139 months? Basically get to 144 months. That is 12 years, 12 flipping years. Where does 12 years lead us? 2036. I don't even think 99% of people watching right now are even going to be interested in the markets in 12 years time. Let alone 2 years time, should we see a peak in the next 12 months. Prove me wrong. Stick around, prove me wrong. Okay, so that's the Home Builders ETF. Even if we see this thing rally from here, because we're on the 50% level, we've seen this signal, which over the last 5-7 years has shown to be, you need to wait at least, on average, those 2 times, 2 years to get to a new all-time high. That would be October 2026, should we make a new all-time high. Otherwise, if this is the peak, probably not going to see an all-time high, let's say for several years. It doesn't have to be the exact same thing like last time, but it could be several years until the Home Builders was to see a new one. So either way, it could be a significant area here. Let's keep watching. There'll be some invalidations along the way. We'll get to that should that occur, but for now, they are the signals at play. Finally, I promised you ETH, and we have some significant signals here on the weekly chart. Quick shout out for TIA Premium sponsoring today's video. We have a sale going out today. Link in the video description for that. That's your free report. You'll also get the free reports that come out as well if you subscribe to the email list there. So trade alerts, free reports, sale on today. Why wouldn't you? It's absolutely free. You can unsubscribe anytime. And the masterclasses and courses you get with TIA Premium will help you build this plan together to navigate the end of the cycle and the correction. Speaking of the correction, I've got Bitcoin and gold to get through after ETH at this low. 3 weekly bars up. Is this strong enough for Ethereum to get back to significant levels at 21? Obviously, time will tell, but this is still relatively flat. It could be the end of severe declines. Doesn't mean it can't go a little lower. And here are my price targets, somewhere around $1,200, maybe a touch under. But when we see these 3 bars, generally it's a slow of the move. That could still mean it goes a little lower, but it's probably very unlikely you're going to see severe dumps like that. It's just going to be a loss of interest, and then market starts to move again. So this is at least a first good sign here for Ethereum, breaking past a weekly swing low, which it has not done since the peak. Has not gotten above a weekly swing low after it's broken down from it since that top. So this is the first good sign, I guess, for the bulls with ETH, albeit it could be quite slow from this point. Now, Bitcoin versus gold is on the rise again, meaning you've got gold price dropping off, you've got Bitcoin price going up, and in terms of the assets to be piling into, if you will, with this global money supply increasing, you've got to be looking at the stronger assets. And to assess those stronger assets, you want to compare the two that you're interested in. I'm of course interested in BTC. If you're interested in gold, then compare Bitcoin and gold. If you're interested in the NASDAQ, compare Bitcoin and NASDAQ. In both of these instances, Bitcoin is going up against the NASDAQ, and like I just showed here, is going back up against gold, which means it's at this point on a weekly chart, it's in a stronger position than investing in NASDAQ and gold. And so how is this helpful? Basically, if you have a limited money, which we all do, limited money to invest in the markets, you probably want to be making the most from it. And the way to do it is to compare those assets. That's all this chart is doing. And that's what we do when we look at Bitcoin versus a different altcoin. You're looking at an alt versus a BTC. If you see those going, if the alt is going down against BTC, well, then you're much better off being in BTC because it's going up against the altcoin. So I'm doing the same thing here. I want to see these charts going up because I'm comparing Bitcoin with the NASDAQ. And what this number on the side means is now it costs me 4.89 NASDAQ contracts to buy one BTC, whereas before it cost me 1.8 NASDAQ contracts to buy Bitcoin. So it's getting more expensive to buy BTC versus the NASDAQ. I need more NASDAQ contracts to get out and buy myself one BTC. And the same thing goes here for gold. This might be an easier representation here. How many gold ounces required to buy one Bitcoin? Today, you need 29 gold ounces to buy one BTC. 3 weeks ago, you needed 25 ounces. So you needed less gold to buy one BTC compared to now. And if we look at that as a percentage from the low to now, it's about 20%. So Bitcoin has gone up 20% versus gold. However, Bitcoin versus the dollar, because obviously gold also went up, has gone up about 30% in that same time period. So following these charts will help with, at least in my opinion, will help at the end of the cycle. If you're seeing these, say in the case of Bitcoin and gold, Bitcoin's really spiking out, you might wish to switch from Bitcoin to gold. I'd only be looking to do this a couple of times throughout the entire cycle, as there'll be fees and holding costs involved. But that comes down to your own personal risk management, money management, portfolio management as well. And so if you want to learn how to navigate the end of the cycle to a greater degree, TIA Premium is on sale today. Check it out, link in the top of the video description. That's today's video. That's a look at the perfect storm brewing here across all of the markets and how I see it all coming together. Make sure you hit the like, subscribe button. Heaps more coming up for you guys. Have a fantastic weekend. I'll see you guys at the next video. Peace out.